As you've looked at the bank earnings so far, we're sort of a little bit past the midpoint. What does it tell you about the state of the banks in the U.S.? And then we'll talk about Europe.
I think we're in really good shape. Now, keep in mind that I manage mostly international funds, but what we're really seeing is really a good era for banks because interest rates seem to have bottomed, which should be better for spreads. The economy's strong, which is good for loan losses, and it's also very quite positive for credit expansion. In the meantime, they're using financial tech and all kinds of things to cut costs. So we should see a really good tailwind for banks and bank earnings globally going forward over the next 12 to 36 months.
So, David, compare and contrast U.S. versus Europe with respect to banks. As I say, you were a believer in European banks when a lot of people were not believers. You've done pretty well with that. But compare and contrast. For example, here we have the tax cuts that really seem to be flowing through. What's really supporting European banks at the moment?
Well, one of the things that has really scared people in European banks was the whole sovereign debt crisis of a few years ago, the Greek crisis. Recall, it wasn't too long ago people thought that there would be massive sovereign defaults and the banks would get killed and the European banks needed to restructure. Well, the good news is all these things happen. All the restructuring has happened, but none of the bad things have happened. There was no sovereign debt default. And now we're starting to see a real meaningful expansion and European economic growth. Those things I mentioned, those tailwinds of lower loan losses and better credit expansion, this is what growth gives you. And finally, after nearly a decade of stagnation, we see Europe growing. And lastly, I would say from a capital and regulatory perspective, these banks have fought a headwind in both these sectors as they had to build capital. And they were really going up against a harsher regulatory environment. And now what we're again seeing is a relaxation of the regulatory environment. And all these banks, these big European banks, for the most part, are fully capitalized. So this is really good for the European banking sector. And in the meantime, the price you're expected to pay or being asked to pay by the market, banks trade at a significant discount to the market. And again, we're at the bottom of the earnings cycle.